Welcome back to the deep dive. Today we're digging into a company you see literally every single day, but whose actual business is.
Well, it's one of the most misunderstood in all of finance.
Yeah, that's a good way to put it.
We are talking, of course, about Visa.
Hmm?
So our mission,
Ugh.
based on the source material you sent over, is to really clarify what Visa is. We want to look at the genius of its business model and really understand its role as this invisible glue holding global commerce together.
And the place to start is with the biggest misconception of all.
Exactly, the one everyone makes.
Yeah.
That Visa is a bank. That is the company lending you money when you tap your card.
Right.
Okay, let's unpack this.
Yeah, we have to correct that right off the bat for you, the listener. Visa is not a bank, full stop.
It's not.
It doesn't take your deposits, and this is the most critical part, it carries almost zero credit risk because it does not lend money to anyone.
So, what is it then, if it's not the money? It's the infrastructure. The purest form of it, really. It's the network that makes sure the money your bank holds can be used securely, instantly, anywhere in the world, 24/7.
Right. The logo is almost a distraction. The real magic is what happens behind the scenes, that instantaneous, quiet processing every time a payment goes through.
Whether you're buying coffee down the street or a plane ticket online.
Exactly. But to really get a handle on this network, we have to go back. Way back. Long before the internet. Long before anyone even dreamed of instant transfers. We have to rewind to 1958.
1958, yeah, and that context is everything. You have to imagine, at that time, your options were cash or maybe writing a check for something big.
Physical money, that was it.
That was the norm. So when Bank of America launched this revolutionary experiment called Bank Americard, the very idea of a plastic card for buy now, pay later it was completely new.
Almost science fiction.
It was incredibly risky for them at first. Very expensive, very slow by our standards today. But it introduced this powerful foundational idea, which that money didn't have to be a physical thing you held in your hand. Commerce could be separated from the literal exchange of coins and notes.
Yeah.
That was the breakthrough.
And an idea that big couldn't stay with just one bank. By the 70s, it was going global, and that name, Bank Americard, was... well, it was holding it back.
It was too specific. So that's when you see the pivotal shift. Bank Americard is reborn as Visa.
And that name was no accident.
Oh, not at all. It was deeply strategic. It's short, it's easy to say in almost any language, and it sounds universal.
So Visa stopped being just a card program. It became something else entirely. It became the builder of the world's digital rails.
That's the perfect term for it. They decided they weren't interested in owning the capital, the money itself.
They just wanted to own the path.
Precisely. Their identity became crystal clear. We are not the owners of money. We are the world's most trusted messenger of money.
And that idea of trust and reliability is everything when you look at the scale of this thing today. I mean, the numbers are just, they're staggering.
They're hard to comprehend.
Visa operates in over 200 countries and territories.
Basically everywhere.
We're talking hundreds of billions of transactions,
Yeah.
trillions of dollars in payment volume every single year.
And if we connect this to the bigger picture, that scale isn't just about making a profit. It translates directly into systemic global importance.
Right.
You have to ask yourself the question, what would actually happen if Visa just stopped working?
For even a few minutes?
For 10 minutes. The source material lays it out pretty clearly. Airports would grind to a halt. Supermarket checkouts would just freeze.
Online shopping is gone.
Online commerce would cease globally. Petrol stations would have huge problems. Very, very few companies on Earth have that level of immediate systemic impact.
It's not just a company, it's critical infrastructure, like a power grid. So let's get to the heart of it, the business model. Because if they don't hold the money and they're not charging me interest, how on earth are they so profitable?
That's the absolute genius of it. They figured out how to monetize movement and authentication, not capital.
Okay, break that down.
Every single time someone, anyone, uses that network, Visa charges a tiny, almost microscopic fee. It's called an interchange or service fee.
Just a fraction of a cent, maybe?
Sometimes, yeah. But that tiny fraction, when you multiply it by billions and billions of transactions every single day all over the world, well, it adds up.
So they completely separated revenue from risk.
Exactly. They just sidestep all the huge liabilities that banks and lenders have to worry about. There's no credit risk because they don't issue the credit.
No risk of a bank run because there are no deposits.
No bad loan write-offs, nothing. They just provide a secure, reliable communication service and take a tiny slice for doing so.
Here's where it gets really interesting for me, the actual mechanics. To us, you tap a card, you hear a beep, and you walk away. It takes less than a second.
Effortless.
But in that single heartbeat, this incredibly complex, invisible dance is happening in the background. So let's walk through it. I tap my card at the coffee shop. What happens?
Okay, so that signal immediately goes to the shop's bank. Their bank then sends a request through Visa's network, VisaNet.
And Visa acts like a traffic cop.
A very, very smart traffic cop.
Yeah.
It instantly routes that request to your specific bank, the one that actually issued your card and holds your money.
And while that's happening, something else is going on, right? The fraud check.
Yes. In that same millisecond, Visa's AI and machine learning models are analyzing the transaction for any sign of fraud. Is this a normal purchase for you? Is the location right?
So my bank gets the request, it sees I have the money, it gives the okay.
It sends an approved message right back through Visa's rails. That message flies back to the coffee shop's terminal, and you get the green light.
All in the time it takes to blink. They aren't moving money. They're just moving a secure, verified message.
That's it. It's a communication network. And that's why they've managed to survive and thrive through every single tech wave since the 50s.
What's fascinating here is they don't seem to fight new technology.
They do the opposite. They absorb it. They don't care what the consumer gadget is. They just want to be the foundational layer that makes it work. They are the connective tissue.
Give me some examples.
Okay, think about the rise of e-commerce. It needed secure online payments. Who built the authentication systems? Visa.
Right, verified by Visa.
Then came mobile wallets. Apple Pay, Google Pay. Visa didn't try to build a competing phone. They just embedded their network right inside them.
So when I use Apple Pay, I'm still using Visa's rails.
You're just using a different front end. They powered the shift to contactless, and now look at fintech. All these new digital banks and payment apps.
Yeah.
What do they rely on for global acceptance?
Visa's network.
Of course. Even crypto. They didn't fight it. They built on-ramps and off-ramps so people could spend digital assets using a Visa card. They monetize bringing innovation onto their trusted existing rails.
And that word trust is so important. That doesn't just happen by accident.
Oh, absolutely not. It's built over decades. The source material points out they spend billions every year on security, on redundancy, on cybersecurity, and fraud detection.
They have to.
Their entire business, their entire value proposition rests on that one single idea. Trust.
And that trust has had huge effects on society, especially in developing economies.
A massive impact. Think about places where cash was king for centuries. As smartphones started to spread across Africa, Southeast Asia, Latin America, Visa became the bridge to financial inclusion.
It let people participate in the global digital economy for the very first time.
Yes. Your card, or your digital card on your phone, it effectively became your global financial identity. A passport to commerce.
So what we're seeing is this incredible quiet power. They don't need splashy marketing or viral trends.
No, infrastructure outlives trends.
They just build the roads that everything else runs on.
And that really is the ultimate fintech lesson from all this. True, long-term dominance isn't about having the coolest app. It's about becoming completely, utterly indispensable.
You connect the banks, you power the startups, you move the money.
You are the foundation.
So what does this all mean for you as you're listening to this? When we look back at the last 50 years of the digital economy, maybe we shouldn't just focus on the flashy apps.
No.
We should probably focus more on the silent, invisible infrastructure that allowed this whole interconnected world to even exist in the first place.
Which brings us to a final provocative thought for you to consider. If Visa is the invisible network that allows governments to trial digital currencies, and allows its own biggest competitors to operate using its rails, how do we even begin to measure the true strategic geopolitical power of a company that insists it's just a messenger and not a bank?
That quiet control.
That's where the real power is.